to another weekly market breakdown. And if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. Also, if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like for me to cover in my next video. This week, we'll be looking at GBPUSD, NZDUSD, NZDCAD, the EURGBP, and the NASDAQ 100 from a technical perspective. Now, starting with GBP USD. Now, starting on the monthly time frame, what do we see? Firstly, if we look over here, we can firstly see how the market printed this level of support. Support got broken. The market came to test it as resistance twice, but wasn't able to break above that. Also, if you look here at the bottom, you can see how the market printed this strong level of resistance, broke above that, came to test it as support, and the market was literally stuck in between this phase without giving us a clear indication of whether we could move to the upside or the downside. And the main reason for that basically is because that we had positive data for the GBP and also had positive data for the USD. Now, dropping on down on the weekly time frame, what do we see? Now, from a weekly perspective, we can firstly see how the market last week had found resistance support over here. And the market rejected that level quite aggressively. But one thing that we also need to keep in mind is that whenever you see the market print a candle with a wick, you can normally expect the next candle to go and fill in the wick. So in the short term, we can definitely expect the GBP USD to slightly continue higher before the continuation to the downside. Now, from a daily perspective, what do we have? Now, firstly, we can see how the market had printed this massive information. After an information, you expect a pullback to the neckline before the continuation. Now we can also see last week, Friday, the market had also printed this equal low, giving us a further confirmation that we can even expect to move to the upside before the continuation. The market also printed this massive impulse and started the correction. Now the best way to measure that correction is by taking your Fibonacci from the low to the high. And you can see here we've got a very good confluence of the 61.8 that is lining up almost perfectly with this structure of the neckline of the information that the market had created, because this level here acted as a resistance. The market broke above that, came to test it as support multiple times, melted below that. All of that support is now once again turned resistance. So the best way we are going to approach the situation is wait for the bullish momentum to continue, and then from there we're going to start looking for selling opportunities for the market to go and complete that information at the neckline there as well. Now, next in line, we've got the NZD USD. Now, starting on the monthly time frame, what do we have? Now, firstly, we can see how NZD USD is currently trading below this very strong level of support. Now, this level over here acted as resistance multiple times. The market came to test it as support thrice, broke below that, and it's now testing it as support, giving us a confirmation that we can definitely expect the NZD to get weaker against the USD in the long term. Now, from a weekly perspective, what do we have? Now, if you look here, and this is exactly what I was referring to. Firstly, you can see how the market printed this level of support over here. Support got broken and the resistance got rejected quite aggressively, giving us a further indication that we can definitely expect the NZD to get weaker as well. Now, here from a daily perspective, firstly, we've got a contradiction between the daily and the weekly, because firstly, we could see how the market had printed this massive impulse, gave us the correction, and if you take your Fibonacci there from the low to the high, you can see how the market had tested and rejected the 78.6 Fibonacci taken on this impulse leg. So we could definitely expect in the short term or in the near term for the NZD to potentially increase in strength, and then we could see that continuation happen to the downside there as well. So based off where we stand now, we could definitely expect NZD USD to increase in value and then potentially pull back, and then potentially see that continuation to the upside there as well. So the best way I would say to approach the situation from where we are here, in terms of where we are over here now, because the market had found resistance there as well, and the market found support here. Now the best way to approach the situation going into next week is to wait for the market to break above that level, and on the retest start looking for buying opportunities, because we might see this market stay in this consolidation phase and until something big happens, like interest rate hikes coming up for the NZ for the US dollar there as well. Alternatively, if the market starts to melt to the downside, we're just going to wait for that break of support and resistance and look for sells to the downside there as well, because as traders we have to be reactive and not predictive and learn to adapt to the ever-changing market environment. Now the current situation that we got here on NZDCAD if you look left over here, you can see how the market had printed this strong level of support. The market broke below that, came to test it as a resistance. We also had that massive impulse, and after an impulse we got the correction. And if you take your Fibonacci from the high to the low of this massive impulse leg, you can see how the market tested and rejected the 50% Fibonacci level, giving us an indication that we can definitely look for a selling opportunity for them to the minus 27 for the market to go and test that previous level of support that it had created. Now here on the weekly time frame, what do I have? Now from a weekly perspective, the price action is a lot clearer. Now you can see over here that this was a very strong level of support. Now once again, support did not hold, the market broke below that, came to test it as resistance. The only problem that we have over here is the market printed this candle with this long wick. Now normally if the market prints a candle with a body 50% to the wick, you can always expect the market to go and fill in that next candle. And the way you know that is by taking your Fibonacci from the low to the high of the candle, and we can see here the market did not give us a 50%. So if the candle had closed above the 50% Fibonacci level, we could have expected the next candle to go and fill in that wick, but because we did not get a 50% candle to the body of the 50% body to the candle, we can definitely expect this continuation to the downside. Now from from a daily perspective, what do we have? Now we can firstly see the market had started the correction to the downside as well. Now I would say the best way to approach the situation is, firstly, if you look left, you can see we had that level of resistance got broken, became support, support did not hold, the market started to melt to the downside, and the market had also printed this structural level over here. Now we can easily approach this market two ways. Now we can either swing this thing all the way to the downside. So if you are going to trade this, I would probably see this market start this meltdown basically from where it is now, and then go and test that level, probably creating some structure there for the pullback, and then break below this level. Then so we can kind of see this happen here as well. So the best way that we are going to trade this market is, so we're going to look for selling opportunities from where the market is now, and we're going to use this as our first take profit level in the market. From there, the market is going to create some sort of a structure, and then I'll give you guys another update on that as well. But if you are looking to trade this market long term, you can definitely hold that opportunity all the way till there as well. Oops, sorry about that, guys. That's supposed to go there, sorry. So you can use this as a target level if you are a short-term trader, but if you're looking for a swing opportunity, definitely swing this thing all the way to the downside there as well. It's very important to make sure that you also monitor the price, because the market could go up and then print, grab that liquidity from the retail traders also. So just make sure you check the sentiment data for that as well. Now the situation that we got here on EURGBP that I haven't looked at for quite some time. Now the EURGBP has been quite bearish, and the reason for that was the interest rates for the euro has not been increased, and it's still sitting at 0. But the interest rate for GBP was increased with a 0.25 basis points, and as a result of that, the euro has been getting quite weak against the GBP. So looking at the monthly time frame, we got support got broken, testing it as resistance. We could probably see the market continue to the downside further going into next week. On the weekly time frame, what do we see now? Here from a weekly perspective, the price action is quite interesting. Here where the market print the level of resistance, the market broke above that, came to test it as support did not hold, the market broke above that level of support, which is now, well, which was the resistance. So all of that resistance is once again support there as well. The only problem is that from a monthly perspective, we are trading at the resistance. So if you go on the daily time frame, we are printing near a potential level of support, but we'll see what the best way is as we go down on the charts here as well. But you guys don't have to worry, I will do an update from a order flow, fundamental and technical perspective. Now on the daily time frame, the market is currently printing this triple top. We had the market testing it, the market there twice. Market also printed this massive impulse. Now after an impulse, you expect a correction, and the best way to measure that, I'm sure you know by now, is by taking a Fibonacci from the low to the high. Now if you look at the 0.50%, the 0.50% is the best Fibonacci lining up with this structure that we had in the market here as well. So I'd probably expect the market to come back, test that level, and then we could potentially see the continuation to the upside as well. But if you look here, we also have this structural level over here, so the market could potentially go and test that level there first before we see that meltdown and the continuation to the upside. Now, the best way to for us to approach the situation is just to make sure that we monitor the price action that we find around this area, because even if you go in there with a sell as it is now, you'd still have a good entry because your stop loss would then be above this level, or you can just wait until it gets there if you are the kind of person trader there as well. That's done. Next thing, we've got everyone's favorite, which is the NASDAQ 100. Now, the NASDAQ 100 on the monthly time frame, we can see the NASDAQ printed this information. After an information, you expect to pull back to the neckline before the continuation to the downside there as well. Now, the NASDAQ still has the potential opportunity to go and test these lows over here, because we know when the interest rate hike gets announced next month, we can expect the market to continue to the downside. But I am waiting for CPI data to get released on the 13th of March 1st, so you guys can expect some more updates on the NASDAQ from a fundamental, technical, order flow and sentiment perspective as we approach the interest rate hike this season there as well. But as it stands now in the short term, we could probably see the NASDAQ go and test this previous level of support that is now turned resistance before the continuation to the downside as well. We also have 1 day to the month also, and we can see how the market is testing very strong level of resistance that got broken, which is now turned support. So it's very important for also to just see where this monthly candle closes. If this monthly candle closes above this level, we can expect the pullback to that level, and then expect the sell-off as we get closer to interest rate hike decisions. Now, on the weekly time frame, what do we have? Now, we saw on Friday the market found a strong level of resistance. So for those of you that are not aware, the reason why the NASDAQ pulled back on Friday was just that Russia and Ukraine had decided that they were going to meet and hopefully resolve this issue. And then, because these people buy off speculation, and not only did the market find support, but it was kind of weird how they made that agreement just as the NASDAQ found support, that they were going to look at having a conversation and see how they can resolve this as well. Now, in any case, from a weekly perspective, we can see support got broken and it's now turned resistance. We could have the potential confluence of the 61.8 if we take the Fibonacci from the low to the high of the impulse, just like I said. So we can definitely expect the NASDAQ to creep into those levels before we can get this continuation to the downside from a weekly perspective. On the daily time frame, what do we have? Now, from a daily perspective, this is quite interesting, because why? Firstly, if we do look left, you can see the market printed the resistance, broke above that, came to test it as support. However, the market also printed this level of support that got broken. Now, there's two ways that we need to be very careful in the way we trade this. Going into next week, the NASDAQ could find this consolidation phase, waiting to see what the outcome is of Ukraine and Russia. If things does get worse, you can expect it to continue to the downside. If there is some sort of agreement, you can expect the NASDAQ to pull higher and break out of this consolidation phase. Alternatively, stock markets is still gonna have a massive sell-off coming, because it's not only the tension between Russia and Ukraine that's driving the stock market, but as soon as those interest rate hikes gets released, we're also going to see a massive stock market sell-off coming as well. Now guys, that is it from my side. I want to say thank you for the support that you guys have shown the channel. Thank you for your time, and as always, have a beautiful Saturday, and cheers for years.